Good afternoon, everyone. I'm Annette Vanderveer with the Human Services Department of DeKalb County. And today we have a wonderful speaker for you for our Lunch and Learn series. Before I bring on Grace Arlen, I want to just remind you to remember to put your questions in the Q&A, and we will have Grace come on momentarily. But I also want to make sure that you know we have several webinars coming up. We have them all throughout June and one on June 28th, June 23rd, another on June. I'm sorry, I'm jumping to July. Let's go with July 23rd and July 30th and August 12th. Those are our newest lunch and learns. Okay, so let me tell you a little bit about Grace Arlen. Grace is the onboarding and operations, that's her title. I'm not sure if you're VP assistant or what, but you said onboarding. She's responsible for onboarding and operations. She's been with the Flagstone group since 2022. She started as a college intern and she worked her way up. And she's very passionate about data and statistics. Please welcome Grace Arland.
Hey everyone, I'm Grace. I'm super excited to be here. I'm going to go ahead and share my screen with you all. Let's see.
Try again, Grace.
It looks
It's
like,
starting.
oh,
It's
are you
start
guys able to see?
it's starting, but it has, there we go. It's up.
Great. Awesome. Yeah, thank you so much, Annette, for the quick introduction. My name is Grace. And yeah, I've been working with Flagstone since 2022. I'm very excited to be here. I head up our operations and onboarding, like she mentioned. And yeah, everything customer insight and analysis into that, really getting to dig into the data there is what I really love about this job. So I'm excited to get to share that with y'all today. Um, so yeah, we'll go ahead and jump into it. The Flagstone Initiative uses financial stability to prevent eviction. So we have a super simple mission, and we're excited to be getting started in the Atlanta area. So let's see. Here we go. So our mission here is to help with this crisis that America is facing. I'm sure this comes as no surprise to anyone on the call, but many Americans are living paycheck to paycheck and they're rent burdened. That means 30 to 50%, if not more, of their income is being devoted to rent. And unfortunately, because of that, it means evictions happen often and very quickly. In the last year, we saw 3.6 million eviction filings happening. And we know that as rent prices increase, this problem is only growing. And unfortunately, it affects a lot of the people who we see in our lower workforce housing properties that we serve. A really great case study into this is Sombrania, who I had the opportunity to speak with last year. She's a single mother raising a 5-year-old son, and she's working full time as a daycare teacher. She's making $34,000 a year, so working hard, but unfortunately, there's no help available to her, and her situation is very precarious. So anytime she needs that extra bit of help, she knows she's on her own. When she went to try to apply for any government assistance, she was told she makes too much. But when it comes to actually paying the rent, affording essentials, she makes too little. Her tight cash flow is a formula that she's having to work out every single day to be able to provide for her family and herself. And unfortunately, on top of those kind of day-to-day struggles, we also see financial shocks happening. It can be really small things at first, like a car breaking down or even a couple sick days off of work. And it can end in a little bit of a snowballing effect. And that's what we call the financial hardship dominoes. So it starts with something small, like that tight cash flow that Sombrania and so many others experience. 61% of Americans are living paycheck to paycheck and likely dealing with a lot of these issues. And it is compounded by the fact that there's no savings. There's no cushion whenever something does end up going wrong. And when those things happen, like those car repairs, sick days, or anything else, Unfortunately, that's when these larger problems start to occur, like large arrears in the rent balance and delinquency. And we know that once a resident gets, 2+ months behind on rent, that's a lot that they're having to overcome and dig themselves out of that hole. And it's really, really difficult to reverse, especially when you don't have help that you can rely on. Unfortunately, then we know that the eviction process starts. We know landlords are, ready to evict when they see something like this happening, and they're very quick about it. So there's not a lot of time to get, resources together when resources are available. And it's super stressful, especially when you have a family like San Bernilla that you're trying to provide for and make sure that they can, get through a traumatic incident like this. The eviction process happens very fast. And worst case scenario, it sometimes leads to homelessness. So when we look at our current system and the help that's available, we notice that a lot of the resources are focused on these three last dominoes that I mentioned, so delinquency, eviction, homelessness. And these are really difficult and very costly to try to solve. So especially delinquency and eviction. Once these arrears are hitting, $3,000 per person, or, evictions, which can be costly not only for, the resident, but for the community at large, we're having to rely on these large pools of resources like ERAP dollars that we know are dwindling. So without being able to rely on these, sources that maybe we've had in the past, unfortunately, more and more people are being funneled into this worst case scenario, homelessness. And we want to make sure that we can stop this as much as possible. So at the Flagstone Initiative, we're focused on going upstream. Instead of focusing on these really difficult to reverse problems later in the domino cycle, we're looking a little bit before that. So when the problem is still relatively manageable, a tight cash flow, little to no savings, and then sometimes financial shocks are happening. And the way that we do this is through upstream prevention. We believe that an ounce of prevention is worth a pound of cure. And what we offer to residents, but we're excited, we just got our start in Clarkston, right outside of Alabama in DeKalb County, is with our rent loan program. So this program works great for residents who are dealing with those first three dominoes, juggling those upstream effects. And then when something happens, that's when we start to see that, disconnect. Like, is the problem going to start snowballing, or can we stop it early? And of course, our goal is always to stop it early. And we do that with the rent loan. So it's a $500, no fee, no interest loan, and it helps cover rent. It goes directly to rent, and it absorbs that one-off shock that might have started them down that further path. And we make sure that it's super manageable to repay as well. So it's $20 a week for 25 weeks, exactly $500. What we've seen when we offer this program to, workforce housing, multifamily homes is really, really compelling results. So we see 7.7 versus 12.2%. So 37% lower delinquency for folks who are able to engage with our rent loan program. This means that, those folks are not having to worry at the end of the month about a past due balance. They've paid off all of their rent for a month, and they can go into the next month knowing that they're not having to, account for these extra charges, extra fees that often come with being late. So we're able to stop that before, it goes past the point of racking up any more arrears. And we also see folks staying in their home longer, which is one of our, one of the impacts that we focus on the absolute most at Flagstone. So our program users are able to stay in their apartments and their rental homes 56% longer than those who are not using our programs. And especially at a lot of these properties, we notice that turnover is really high. As I mentioned a little bit previously, landlords are often ready to evict as soon as they notice the first sign of trouble. So we want to make sure that we can help upstream of that. And these results indicate that when we're able to, get the rent loan into these properties, folks are able to avoid those really negative outcomes if and when those financial shocks do. And I want to speak a little bit too to why this rent loan is effective because there's so many loan products out there. And as a nonprofit, we make ours just a little bit different. Outside of just being upstream, we have a few different ways to make sure that we're serving the audience that really doesn't have a lot of help out there, but struggles without it. So we want our rent loans to intervene as early as possible. And to do this, we work with these different housing partners to communicate to all residents the availability of this loan. So we make sure that they send it, via email, via flyers around the property, so that anyone who feels they need to apply absolutely can. Applications are always open to everyone. And on top of that, the process is super fast. So we know that the difference between eviction and staying in your home is often just a couple of days. So once an application is received by us, residents are given their approval decision within 1 business day on average. Um, and outside of or after the approval process has happened, the funds are delivered super quickly as well. So we want to make sure that once you're approved, your rent loan is able to be seen in your resident balance as soon as possible. Since this is a direct to rent situation, we really want to make sure that we prioritize the timeliness to money between, application and approval and then approval to money received. And this on the right is just an example of how we communicate with the residents. We try to make it as easy as possible. And Flagstone handles the application and approval process ourselves. So we're able to really guarantee that super quick turnaround time without having to ask the property managers or our housing provider partners for, any sort of extra steps needed on. And what we see when we offer this is an 80% approval rate and an 80% repayment rate. So we want to ensure that the residents who need these programs are able to engage with them. And to do that, we prioritize the availability of the loans. As a nonprofit, we have the luxury of being able to take risks on folks who often wouldn't be able to secure, a traditional loan, whether it be, a lost job or a lack of credit. We're able to, assess the situation and approve 80% of the people who apply. And when we do that, we typically see 10 to 15% of a given property using our programs. And we have an 80% repayment rate on those loans. So again, as a nonprofit, we don't expect to be repaid fully by the residents who we offer our rent loans to, but we have a really strong repayment rate at 80%. And we, again, are able to balance that availability piece of the loans, making them to the folks who need them with the sustainability of our service. So by receiving 80% repayment, we can balance that, formula ourselves and be able to sustainably offer our service. And, I just was mentioning the 80% repayment piece. And so I wanted to break down the kind of unit economics of the rent loan. So to make a rent loan, we need 2 things. First, the principal, and we'll get more into where this comes from in a moment. But we also need to be able to make up, what happens on the back end. So we expect 80% repayment, $400 coming from resident repayments. And for the loss, that extra 20%, we have $100 coming from, that loss portion of it. And then we also have a $50 admin fee. So, this is just things like transaction costs, the cost of, having a small nonprofit team. We're small but mighty. And so this is how, the breakdown of the rent loan looks when you get into the more like financial side of actually making sure these things are available to residents. And we share this cost in a few different ways. So for the $150 loan cost that we're expecting, the loss plus the admin, we ask community partners to chip in and we ask housing partners to chip in. Community partners can be anyone from local governments, foundations, nonprofits, these community stakeholders who want to make sure that renters are stable so that those downstream effects like eviction and homelessness don't happen. So that's part of it. And the other part is, of course, the housing partners. They benefit from having residents that are more on time with rent, that stay in their homes longer. So we also ask them to chip in $75 per loan. And when we combine these two goals, we're able to sustainably offer the rent loan, replenish the fund, and yeah, help out a lot of people, especially in the Atlanta area where the need is high. Um, so that's our sharing the cost model. Yeah, thank you guys so much for your time, and I'm excited to answer any and all questions. Annette, I'll turn it back over to you.
Okay. Couple of questions. Uh,
Yeah,
One is you just went over your community partners and your housing partners that chip in $75 each. Who are these folks that are chipping in with you? Who are you working with in
yeah, that's
collaboration?
a great, that's a super great question. Thank you. So, like I said, we're a little bit newer to the Atlanta area, but I can use Alabama as a really great example. So, we've been serving folks in Alabama for about 3 years now.
Mhm.
And since that time, we've worked with a couple of local nonprofits. A great example is the Alabama Power Foundation. So they have this vested interest in a lot of these renters who are, paying their utility bills. They're the Power Foundation. So it makes a lot of sense for them as a community partner to support our work because they want to make sure that folks can stay in their homes. And in addition to Alabama Power Foundation, we also were in communication with the Birmingham city government. This was a really exciting opportunity for us. Um, and they opened the RFP for us. We got approved for, this loan, but unfortunately with the administration change, we weren't able to, come through on the entire amount. So what ended up happening is we've now partnered with the city of Birmingham a little bit in a different way, but they've helped us raise awareness with other community partners outside of the government to help chip in. So yeah, so I guess that's a little bit of a specific example, but really it's any nonprofits or foundations that have this vested interest in making sure that um, their community is stable, whether it's a corporate foundation like Alabama Power or family foundations, which we have a history of working with as well.
Okay. And also, I'm going to encourage the participants to put questions in the Q&A as well. But one question I do have is, do you think that this, because it is a loan and it has to be paid back, would it add additional debt to the family? How is the family
No.
receiving?
Yeah, that's a really great question, and we're asked this a lot. So one really important part about this loan is that we never, report credit. Any missed and late payments are immediately forgiven. Um, and the only penalty if you miss payments or if you don't pay it back at all, $0 paid back, is just that you can't take out a rent loan again. So
Mhm.
there's no, debt that's incurred to the family. And oftentimes, we will take the risk on a family who we think we can be really impactful for, but that we know is likely not going to be a strong repayer. So there are some special situations where the rent loan ends up being a little bit more of a rent grant, but for the most part, um, our residents pay back really, really strong. And I think a lot of that has to do with the fact
Yes.
that um, it's going towards their rent balance. So, you know, once that gets approved and applied over, it's just a $20 payment each week. And they know that, okay, I've already seen this apply to my balance. So it makes it a little bit, it's a little bit different than the structure of a traditional loan, if that makes sense.
Okay. We have another question from Paige.
Um, the question I have is, what would be the minimum, or what is the minimum income for a family for them to qualify for the loan? So like if they
Yeah.
make below a certain amount, do you guys like not approve them, or how does that work?
Yeah, that's a great question. So we do have eligibility requirements for the loan. The biggest is just that they're not already in the eviction process. So, we talked about this domino effect. And once you get to this stage of being in the eviction process, it's at a point where a $500 loan is not going to be as meaningful as larger help. So that's the main thing. The other eligibility requirement that we have is that you have some form of current income. So it can be, you know, working a traditional job, it can be benefits, SSI, any type of current income you're bringing in, we're going to put that against the amount that you personally are responsible for in rent and kind of see the breakdown there. Does that make sense, Paige?
Yeah, so but what happens if like they were just, let go or laid off from their job and they don't have any other source of basically any other proof of income to show you guys? Like, let's say if they don't have any SSI or any disability, anything like that, and they were solely reliant on that one job. So how does that work?
Yeah, that's a really tough situation. And unfortunately, we're not always able to help. When the problem starts to expand beyond a one-time shock and starts to become more of a, ongoing financial issue, that's where we're not going to be able to help as often. And a lost job is oftentimes one of those, types of problems that a $500 loan is not going to end up being able to solve at the end of the day. One thing we are able to do if a resident loses a job, but finds something else or is able to apply again in the future if they're still at the property, we can kind of look back and say, okay, we know you were making X amount then, you had a break in income, and now you're making this amount now. So we can kind of help bridge the gap once another job is found, but it's really hard for us in that interim time to help out. Yeah.
Okay. And another question. So for a struggling family, what would make them want to seek assistance from you guys rather than the ones that are provided from the county where they don't have to pay back, or the county can help with them with their eviction process, or other organizations that can also help with any other things that they may be going through as far as like with rent? Because I know you said you help with Atlanta as well, but Atlanta is like one of the highest for rent right now. So a lot
Yeah.
of that we do receive, they do need assistance like right away, and but they may not be able to again pay back. So like, what would be the difference between you guys and other organizations?
Yeah, so the big difference between us and other organizations is that we're helping really far upstream when it's still a little bit more cost effective to provide the help, but also when the problem is smaller. And unfortunately, like we know that a lot of these like bigger resources, like ERAP and these, other government county services that have been able to provide a really big amount to fix the arrear problem once it's already gotten bigger, those things are starting to dwindle. We can't rely on that money as much anymore, is what we've seen at Flagstone at least. And so we try to avoid the problem from getting to that situation in the first place. So, you know, as a renter, you're wanting to make sure that you know, you're avoiding racking up those arrears as much as possible. So if your problem is still small and it's difficult to get a hold of those larger dwindling resources, that's when the rent loan is really helpful. And another thing that I think makes this appealing to families who might be in a really stressful situation is that the rent loan is super easy to apply for. Um, it's a pretty short application. We're going to give you your approval decision in, a day and be able to get that money over to your landlord in a couple of days, versus the long wait times to get approval for some of these larger services, as well as then the lag for that money actually being able to hit their account. We're upstream and we're timely. And I think those two things really help to make us available and a good option for a lot of the people who might be struggling.
Okay. Well, thank you. I have another question.
Yeah.
How can someone from DeKalb County, Georgia, get assistance? And what is the approximate time frame from the application to receipt of the loan?
Yeah, that's a great question too. So right now we work exclusively through housing providers. So, an ask that I have for this group is if you all have housing providers who you think would be a good fit for this program, whose residents might be struggling, but who also believe in, helping the resident, making sure that they can stay in their homes longer. We would absolutely love to serve those residents. And, once we start working with a property, every single resident is, covered by the rent loan. They have the option to apply at any time. So that's number one. And to the second part of your question, Annette, once an application goes through, so we require that you submit, that current income, like I was telling Paige, but once you, answer a few questions, submit your current income, we're going to be able to get back to you, either within the day or within one day. As a small team, we try to work really, really fast. We see and read all of these applications ourselves, and we know it's really important to, get people their answer as quickly as possible. And once we do that, it's just a super simple, wiring of $500 over to their property, and we're good to go.
So there's not a set timeline you're trying to.
Maybe I'm misunderstanding the question. Do you mean timeline to
So
working with?
Yeah, once you fill out the application to actually receiving the loan. Well, the housing provider receiving the loan.
Yeah, okay. So the timeline there is 1 to 4 days. It just depends a little bit on how long it takes the housing provider to actually, transfer the money from their big account over to the resident's individual ledger. Usually that's what takes the longest, but we target between 1 to 4 days from the time application is received to money is viewable in the ledger.
Okay. And can you tell me how many families or individuals have been served per year?
Yeah, so we target about 600 rent loans per year, and we've been growing really fast. We're new to Atlanta, so being in Georgia has been really, really exciting for us. We know that there's a lot of need here. And yeah, as we continue expanding here and elsewhere, our goal is to make 1,000 rent loans per city that we're focused on per year. But right now, we're still building up to it. So yeah, any help we can get, we're excited to grow. As a small and young nonprofit, we're hungry to help for sure.
Okay. I want to ask the participants that are on, do you have any specific questions so that I can unmute you and you can, like Asia Gomez, do you have any specific questions? Okay. And also Khadijah, I want to make sure that I'm giving everyone sufficient opportunity. And how does one reach out to you? What's your contact information?
Yeah, so let's see, I can get to my last page here. You're welcome to reach out at hello@flagstoneinitiative.org. My personal email is grace@flagstoneinitiative.org. I'm happy to send you any of this information or anything separate that you have questions wise. Yeah.
Okay. I don't see any more questions. Okay. Well, thank you. I'm appreciative of everyone coming on this afternoon and sharing your time with us. In closing, I'd just like to say thank you to our speakers and to our presenter, and to you, the audience. On behalf of our director, Mr. Damon Scott, and our newest CEO, her name is Lorraine Cochran Johnson. We want to just thank you and thank our audience, and we invite you to come back again, and please have a wonderful afternoon. Thank you.
Thanks, everyone.
Thank you.
Appreciate the time.
Bye-bye.